Let me ask you a quick question. Seriously.
Because Nigeria's SEC just answered that question for all of us. And let me tell you, their answer is expensive. What's going on, finance people? It's Josh here. Welcome back to JoshLM Finance. Let's break this down. Okay, so what exactly just went down? On January 16th, the SEC dropped a brand new set of rules that massively, and I mean you have no idea, massively crank up the minimum amount of capital these fintech companies need to have. Now, we're not just talking about a few small players here. This hits everyone. Crypto exchanges, the robo-advisors you might use, crowdfunding sites, even the big shot venture capital and private equity funds. Basically, if your business even touches people's money in Nigeria, the SEC is now watching you very, very closely. So why the huge change all of a sudden? Well, let's be real. Nigeria's whole fintech and crypto space just exploded over the last few years. It grew incredibly fast. You could even say a little too fast. And with that kind of crazy growth, some pretty serious problems started to pop up. I mean, we've all heard the horror stories, right? Platforms just vanishing into thin air, people getting locked out of their own accounts, unable to access their funds, and just, really bad risk management. You had companies running these huge operations with balance sheets that were thinner than the plastic wrap on a gala sausage. Yeah, it was getting a bit wild out there. And you have to get the scale of this. Over $1 billion has been poured into Nigerian fintech lately. When you have that much cash flying around, it attracts everyone, the good and the bad. And having those weak players in the system isn't just a small risk anymore. It becomes a real danger to the whole financial ecosystem. So the SEC's message with these new rules is crystal clear. It's basically, if you want to play in the big leagues of finance, you need to show up with big boy capital. This isn't just about control, it's about growing up. It's about aligning Nigeria's financial sector with global standards, which is a phase you see happen in pretty much every fast-growing market. All right, let's get to the part I know you've been waiting for, the actual numbers. And trust me, they are something else. We're going to start with the most dramatic one of them all. For crypto exchanges and custodians, the platforms that actually hold on to your crypto assets for you, the new minimum capital is 2 billion naira. Yeah, billion with a B. This one rule all by itself is going to completely reshape the crypto scene. A lot of the smaller players, they're probably not going to make it. Now check this out. Look at the jump for robo-advisors. They're going from a 10 million naira requirement all the way up to 100 million. That is a 10 times increase. The SEC is pretty much saying, look, if your app's algorithm is going to give Nigerians investment advice, you better have some serious financial muscle to back it up. And it doesn't stop there. Crowdfunding platforms now need 200 million. Venture capital firms, 200 million. And private equity fund managers, they need a whopping 500 million naira. The theme here is consistent across the board. If you're managing other people's money, the regulators expect you to have plenty of your own. Okay, so when does all this actually kick in? This part is absolutely crucial. These companies don't have forever to just figure it out. And raising this kind of money, especially in the current economy, it is not a small job. The final deadline for every single one of these companies to get their house in order is June 30th, 2027. So from the announcement, that's roughly a year and a half. And just to be clear, this is not a suggestion. If a company fails to meet this deadline, its license could get suspended or, even worse, just completely revoked. Operations shut down, it's game over. So we've talked about the companies, we've talked about the SEC. And by the way, if you're finding this breakdown helpful, just a quick tap on that like button really does help the channel out. All right, now let's talk about the most important person in this whole story, you. What does all this actually mean for your money and for the apps you use every day? So look, there are really two sides to this coin. The good news is the companies that survive this shakeup are going to be way stronger, which means better protection for you and your money. It builds more trust in the whole system. But there's a trade-off. We'll probably see fewer small startups and a lot more mergers and acquisitions. Think of it like putting speed bumps on an expressway. Yeah, it might slow things down a little bit in the short term, but it also makes the journey a whole lot safer for everybody on the road. Let's make this super practical. Just imagine there's a small robo-advisor app that you use and love. Right now, they might have, say, 50 million naira in capital. Under these new rules, they suddenly need to find another 50 million. And they have to find it fast. This is the real-world pressure these founders are dealing with right now. And this right here, this is really the heart of it. What we're seeing is Nigeria's financial landscape growing up.
The days of letting just anyone handle people's money are over. This whole move is designed to separate the hobby businesses from the real, serious financial institutions.
So I'll just leave you with this one question to think about. When all the dust settles from this, will the fintech or crypto app that you use still be standing? It's definitely something to consider. Thanks for watching till the end. If this helped you, you know what to do. I'll see you in the next one. Take care. Peace.